Today, I want to do two things. The first being looking back at my 2025 predictions to see what I got right and what I got wrong. And the second will be looking ahead into 2026 to predict not just what I think is going to happen, but also look at what may change those predictions from a higher economic level because nobody has a crystal ball. But what we need to do is be prepared for what might happen so that we can act quickly when it does. As a quick recap, for these prediction videos, I focus on three main areas. The first being mortgage rates, the second, inventory, and third, pricing. Now, historically, I tend to be less bullish on mortgage rates than most people. And once again, that paid off. I thought that we would stay between 6% and maybe see a cap of around 7.5%. And that held true. We peaked just over 7%, and we've also gone nearly under 6% on 30-year conventionals, but not quite. We really bottomed out at around 6.125 when we saw some really good products for a couple days. It didn't last very long, but it did happen. Now, for inventory, I thought that we would not go below 200 and that we would peak around 275. And in addition to that, I thought that we would see more new listings than we had in the previous year, which was the lowest year on record in both new listings and the amount of homes that have gone under contract. And that once again held true. We peaked at 259 active homes on the market, and the lowest that we saw was 204 at the very beginning of the year. And for pricing, which is what most people focus on, I felt that we would get another year of appreciation across the board, roughly 3 to 5%. Now, if you have been following me for any degree of time, you will know that condos and single family home markets don't act in tandem. Those percentage increases or changes tend to be a little bit different. And what we saw in 2025 was a 4% increase of median sale price year over year. And for single families, that was a 6% median price increase. If we look at the mean, it's totally different, but these predictions were based off of median numbers. So that is what we will stick with. In a nutshell, 2025 was a better year than 2024. We had more activity, we had more new listings, and we had more buyers buying homes, and those prices reflected that. Now, 2026 is going to be a little bit different, in my opinion. Starting with mortgage rates, I don't think things are going to change too much. I know if you are looking to buy, some of you, and I've heard it from many people, are waiting for rates to drop. They would prefer them to be in the low fives before they would take action. I don't think that's going to happen. I think best case scenario, maybe we do see a 5.75, and that would be a great thing. That would likely be by the end of the year. That would not be something that I would expect to see in the near term. Now, a lot of the predictions out there by bigger companies are predicting that on average, maybe rates will be 6.2, 6.3, 6.4%. I view the economy, I guess, a little bit differently than they do. I think that there's going to be some more pressures than are anticipated. A lot of predictions don't necessarily focus on the downside. I view my job as looking out for the downside, to look out for these red flags and to help people prepare for them and what that's going to mean, not economy wise necessarily, but specifically in a house, in a block, in a neighborhood. But those mortgage rates, I don't think are going to change the math really for many people. I think, yes, obviously the lower the better. But $100 a month isn't going to make or break your decision to buy a second home here in Ocean City, which is what most people are doing. From a primary home standpoint, obviously, yes, it does change the affordability, but that's not the majority of the folks who are buying here in town. So mortgage rates, I think we do see below 6%. I don't think we go really much above 6.5%. I do expect some fluctuations throughout the year, which tends to happen. And on that note, we have tended to see in the first quarter of each year a lower rate before things then pick back up. And you can look into this a million different ways, but I am a simple person. I think there is some impetus by mortgage companies to say, you know what, the spring market's a real thing, right? There's a lot of activity that happens in the real estate world. Let's see if we could squeeze a little bit more out of this. So when we get to Q2, those rates tend to go a little bit higher than they were in Q1. That's not to say it's going to happen guaranteed, but again, we look for trends and patterns and try to figure out how we can best prepare you to end in the situation you want to be in versus feeling like you're up against the wall. Now for inventory, this one is a little bit tricky, and this is the one I'm least confident in, transparently. We are lower than we were at this time last year, right? When we got to January, we saw inventory drop to 204. It was about 220 before the end of the year. We saw homes expire off, which happens every December 31st into January 1st. So seeing as we are already in the low 200s, I do think that we are going to fall below 200 for the first time since 2022. Now, how long that sticks around remains to be seen. We tend to see more new listings in January than we've seen in either November or December of the previous year. So I would expect that we're going to end up in the low 200s, maybe the 225 range by the end of the month. But as far as the bigger picture goes, I don't think we're going to peak around that 260 that we were at. I think it'll be closer to 250, maybe even a little bit lower than that. I just don't see a lot of reason for inventory to flood into the market, right? We're all waiting for that. I hear buyers talking about that frequently something's got to give. The stock market can't last forever. There's going to be people who are then forced to sell. I want to be very transparent and honest with you. I don't expect that to be the case. Is it possible? Sure. Right? It's a non-zero chance of that happening. But because lending restrictions have gotten so tight, and qualifications for buying a second home, which again is most of the people who own in Ocean City, um, people are highly qualified. These are homes that people are viewing not just as a short-term, cash flow loss, which they are. Even if you rent, you're really not breaking even without putting a substantial amount of money down. These are long-term assets. These are generational views that a lot of these buyers are taking of getting in and staying in for decades, passing it on to their kids, their grandkids. So I don't expect to see a flood of highly motivated sellers hitting the market. There's always going to be inventory coming and more choices for buyers. But are they real options? Or are these people testing the market? Are these people trying to see if they can cash out on the, frenzy, quote unquote? Yes, that's most of our inventory that, compared to normal primary home markets, this isn't real inventory. I would say at least 50% of the inventory we have at any given point in time is aspirational inventory where sellers are just trying to see what they can get. They're not motivated. There's really no impetus for them to sell, which makes this very frustrating, right, for you as a buyer to try to find a deal that you feel good about, that you feel the negotiation was actually helpful, right? That there was one, and it's not you having to write a blank check and give up your kidney to get a home here at the beach. So inventory, I expect to be a little bit lower than it was once again, and we're continuing to see that trend year over year. There's no reason to expect that to change. Now, last but not least, pricing. I do expect another across the board 3 to 5% increase. And I know that's very boring, but that has now I do expect price variation among different segments. I think the high level luxury new construction market is going to continue to move upwards. We've seen that already, where once upon a time, not that long ago, a bayfront single family new construction could be had for around $5 million. Now, all of a sudden, we are seeing 10, we are seeing 11, even more than that for a list price. We haven't seen those sell yet, but we've seen multiple nearly $10 million homes go under contract and be sold. So that market, I expect to keep moving. Now, anything else that's in a prime location, that's in peak condition, that doesn't need a whole lot of work, I expect those to continue to appreciate and move up as well. Now, what we have seen even in 2025, any properties that are in a subpar location, and anywhere in Ocean City is a great location, don't get me wrong, but there are still, micro markets along the island. There are places where people would prefer not to be due to flooding, due to lack of parking, many, many things. Those homes, especially if they need a lot of work, especially if they're not in what most people would consider show-ready condition, you're going to have the ability to negotiate on those. And there's a reason for it, right? I tell anybody who reaches out, sends me a property that's been on the market for more than a month or two, there's a reason it's still out there. We can figure out what that is. You don't have to drive yourself crazy looking on ZillowRealtor.com trying to say, what am I missing? Just pick up the phone, call me, we'll talk about it. Because that can make people's heads spin. We can't treat all of these properties completely equally. I don't care if they're all 3 bed, 2 baths that you're looking at. There are differences. There are nuances that are causing a difference among these prices. So that's something you really need to focus on if you're looking to buy in 2026. Now, let's go over a few things that, if they happen, could change the outlook meaningfully. Number one being if mortgage rates actually do drop and stay below 6% for any meaningful amount of time. Number one, I think that is helpful. It will get more affordability back in the market. But after a short period of time, when that demand does pick up and go into full swing, I think sellers will see that, right? They're not naive, I think that will lead to prices going back up, whether that is through sellers trying to get ahead of the curve or whether that is through more bidding wars and those returning where there's more competition in the market. The market always responds. So if costs come down in one area, they're likely to go up in another. That's just the reality. So if mortgage rates change meaningfully either way, that's one thing that could change the predictions. Number two, if there is a big economic shock, and I've talked about this one on each of these prediction videos going back the last several years, and we really haven't seen that happen yet. So if there's a big economic shock that does force people to sell, it is a possibility, and it would have to be really bad for that to happen, whether that is a massive stock market crash, whether that is massive layoffs. It would have to be something very, very big. That's always a possibility. That would reshape everything I'm talking about here. And I would obviously come out with more content to keep you up to date as that is taking place so that you stay in the loop. But that's number two. And number three is one that is out of our control as buyers or sellers, and this is more on a government regulation level. If there are any big changes that would impact owning a second home, qualifications for writing off rental expenses, anything major like that, that would change how people view and value second homes here in Ocean City, that could make a big dent. So, for example, last year we had the rollout in the second half of the year to the change in the mansion tax. I already made a video on that. I'll link it down in the description in case you're unfamiliar with what that means. But I can tell you that there are active efforts to change what that actually did. So those are the three things I have my eye out for. If any of those happen or multiple of those things happen, that will change the predictions. But let's be transparent here. In 2026, I expect the market to reward those who come into this with clear thinking, with confidence, and understanding the realities of the market versus hoping and being aspirational about things that are not necessarily based in reality. I think we see a lot of buyers getting frustrated because they have expectations that are based off of the past versus where we are now. So if you are a buyer heading into 2026, the goal is not to predict the market perfectly. It's to come in with confidence, to be fully educated, to be prepared to act quickly when the right situation presents itself. Because I've told many buyers this in the past, you usually don't get more than one shot at what we would all consider a good deal. There just aren't enough of them to bank on seeing 10 in a year or 5 in a year. You usually get one good shot. And if we are ready and we can capitalize on that, that will set you up for life, basically. If you are able to get in to the island at a good number and walk into some equity, it's a rare situation, but we've been able to do it every single year for clients that have trusted me to help them. So I will continue breaking everything down as it evolves, but I'm here when you need me. If you want some guidance, if you need some assistance, if you have some questions, do not hesitate to reach out. Myself and my team are here to help you make this dream a reality. So thanks as always for hanging out with me, and I will see you next time.